Welcome back. Today's podcast is about supercharging your sales by mastering assumable mortgages. Assumable mortgages are something that Julie and I have known and coached agents how to do for literally decades. The thing that's interesting to me is how many of you, and I think it's been actually kind of an interesting experience having all these conversations with folks that have been in the industry for 10, 15 years. They don't even know what an assumable was. And it's been wonderful for us to share this information with them directly one-on-one. But what's really surprised me is how many of these leaders in the real estate brokerage in particular didn't know anything about assumables. So what we've done, what Julie and I have taken a lot of time to do, is go through, I think, the most important high points of assumable mortgages. And so what we're going to explain to you is what an assumable mortgage is. This sounds like a boring topic, but I promise you this is going to be lightning in a bottle if you want to figure out, essentially have an almost unfair advantage in your marketplace with this information. And we're also going to tell you how to use it to create a lot of buyer and even possibly listing transactions for you. So take a lot of great notes. Now, notes, where are they available? Only on our newsletters. You have to go to harrisrealestatedaily.com. harrisrealestatedaily.com is our exclusive newsletter, our way of saying thank you to all of our thousands and thousands of daily podcast listeners. So just go to harrisrealestatedaily.com and then drop in your email address. And when you do, you're going to get another email. You got to kind of go through the paces, and you then have to confirm that you want the newsletter in your email. So if you put in your email in the past and say it, and then your newsletter didn't arrive, you actually have to confirm you want it by going to your email and then saying you confirm you want it. And that is all it takes. And the newsletter is free. So all of today's notes, and they're incredibly important notes, are going to be available to you. And that's the only place they're going to be available. So this is just an overview of assumable mortgages. We're going to go relatively quick. And then what I'm frankly looking forward to doing is explain to you how you can obviously help people with this information, but also how you can use this as a unique selling proposition so you can do more transactions.
Very well introduced there. So again, our topic, supercharge your sales by mastering assumable mortgages. And this is going to help you on the listing side and on the buyer side. With interest rates significantly higher today than where everybody would like them to be, assumable mortgages offer buyers the chance to take over loans with lower interest rates, providing an edge in a competitive market. However, not all mortgages are assumable. A lot of them are, but not all of them are. So understanding the process is critical for success. So we'll start out basic.
Did you actually do the math on how many were assumable? Because I had done that.
I absolutely have.
Okay, I figured you did. All right, because you'll be absolutely amazed how many mortgages are out there that are assumable. Again, my brain is going right to how these guys can make money.
We've got to introduce what is an assumable first, because as you said, we haven't needed them for quite a few years. But they've always been in the background. So number one, what is an assumable mortgage? An assumable mortgage allows the buyer to take over the seller's existing mortgage, retaining the current terms, think 2.75 or so interest rate. I've heard as low as a 1.875 interest rate, such as interest rate and remaining balance. This is particularly attractive when rates have risen, as buyers can lock in a lower rate.
All right, we're going to say that one more time because it's really important. All right, you might have a mortgage on your house right now, and you might have a mortgage that's less than 3%, less even than 2%. You might not even know this, but your mortgage is assumable by somebody else. Now, it's called assumable with release technically. So what that means is that the mortgage company is going to have to approve, just as if that buyer was applying for the mortgage in the first place.
They have to qualify.
They have to qualify. That's right. And so what they would have to do, let's say you have $100,000 of equity in your property. You bought it for $400. It's worth $500. That buyer would have to write you a check for $100,000 in essence, and then they would assume your existing mortgage. And let's say you bought this thing 5 years ago. There's 25 years left on the loan. The buyer would walk into your mortgage, and for not very much in fees, by the way, at that low interest rate, at that with the same mortgage term. This is not a new mortgage. They are literally assuming your mortgage, assuming your low interest rate, and assuming your mortgage term. Do you think that is powerful information in the marketplace when you're, say, for example, working with buyers, just by letting them know you know about assumables? How many agents out there are even going to have the skill set to say the very basic things that I just said? It'd be about 12 agents, wouldn't you say? And how many agents out there who are smart enough to basically be listing agents are also checking to see if the sellers that they're listing the houses for, if their mortgages are assumable? Do you think offering to the marketplace an assumable mortgage at less than 3% is going to give that listing an unfair advantage in the marketplace? think all about everything I just said and realize what incredibly important information this is. And you are welcome. We are delivering it to you.
You're welcome and goodbye.
I know. Point number 2, how to find out if a mortgage is assumable, Julie Harris.
Yes, not all mortgages are assumable, but again, many are. To check if a mortgage is assumable, okay, there's several different ways. You can review the mortgage documents, either yours or your seller clients, especially the closing disclosure known by you as the CD. Contact the lender. You can just call them with the loan number, or your seller can. And as well as FHA, VA, and USDA loans are generally assumable with lender approval. Nearly 100% of FHA, VA, and USDA loans are generally assumable with the lender's approval. Conventional loans sometimes have a due on sale clause, which prevents assumption, but there are cases where you can get the lender to waive it.
Okay, so let's reframe this, okay? So something like 20% of all mortgages that are out in the United States, unless Julie's found other information.
I'm going to get to that in a second.
Okay, I'm jumping 100 points, but that's okay. Yep, it's 20% of all mortgages in the United States are assumable. Now, even the ones that aren't technically assumable, the mortgage lender might allow them to be assumed with release. It just depends on the lender. Now, do please be clear. You still have to be approved to do the assumable mortgage. You can't just walk in and say, hey, Mr. Seller, I want to assume your mortgage. The lender still has to approve. So they still have to, have credit and all the rest of it. But it's a lot easier to get assumed, or it's a lot easier to, qualify for a mortgage if the rate's less than 3%, clearly. So this is going to really open the floodgates for more opportunities. Imagine if you're hunting expired listings and you come across the seller who you now found out has an assumable mortgage, and you're now explaining to the seller that had the previous listing agent just merely marketed the house as an assumable loan, it would have obviously sold, but probably sold for over asking with multiple offers. You guys get the point here? Point number 3, types of assumable mortgages.
All right, so some little intricacies here. FHA loans are generally assumable with lender approval. Again, just has to have the buyer qualify. And the lender will tell you what those qualifications are. Remember, your buyer has to qualify anyway, and now they're probably qualifying with a lower rate. Okay, so VA loans, assumable by veterans and non-veterans. Okay, so if it's a VA loan, your buyer doesn't have to be a veteran, even if the seller is. Veterans do need a substitution of entitlement to free up their VA loan benefits.
What does that mean? It means that if you're a veteran, and you have using your VA benefits to buy that house, no down payment probably, and you want someone to assume your mortgage, you're going to have to basically file this substitution of entitlement thing. But what you also want to do, listen to me, veterans, is you need to basically file the paperwork properly. Otherwise, you won't be able to then reuse your VA benefits to buy another house. So if you allow someone to assume your mortgage, you're free up to they essentially
you can use it again.
And by the way, the people assuming a VA mortgage don't have to be veterans to assume a VA mortgage. And I did check that, Julie.
Mm-hmm. Yes.
So the moral of the story is that if you're a veteran, make sure you get released from that so you can then use your VA benefits again.
That's right, and that's called a substitution of entitlement. VA has very specific checklists, and none of this is hard, but you do have to do it. Okay, USDA loans, those are assumable with some specific qualifications. And again, conventional loans, usually not assumable due to the due on sale clauses, but the lender can make an exception. And again, as you said, it depends on the lender. Maybe they would rather keep the loan than lose it, and they'll make some exceptions depending on the borrower.
Okay, advanced player alert. Boop, boop. All right, let's say, for example, you have somebody, or maybe you want to assume a mortgage. And let's say, for example, the amount of equity the seller has is more than the amount of money you had saved for your down payment. Do not worry, because chances are that seller would be, now listen to what I'm saying, this will sound confusing, but just open your brain. They will most likely be willing to give you a second mortgage for all or part of their equity. Now, again, Julie, do you remember the second property we bought?
Yes.
Olentangy, whatever it was.
Olentangy Forest. Yep.
Okay, Olentangy Forest. So the seller, we secured a loan.
Yep.
Because
a conventional normal lender.
Yeah, we did. We assumed a loan. The lender wanted 20% down, and I think at the time we had like 15% down, or they went to 30% down because it was a weird condo or something. And we didn't have all the down payment money.
Right.
The seller gave us a second mortgage to basically cover the down payment gap. So every month we'd make the first payment, and then we'd make the second payment to the seller. And I think the second payment was like less than $20,000.
Yeah, it wasn't much.
Yeah, we had it paid off within like 24 months. But the way a second mortgage would work, you'd have to do this obviously through an attorney, but it'd be amortized usually over 30 years. There's probably going to be a balloon payment in 5 or 7 years. And then what happens is basically you're going to be paying back you're going to pay your primary mortgage. You're going to be paying back that seller on the secondary mortgage that you're using as all or part of your down payment. And then let's say, for example, it's a 525. In other words, the payment is consistent with the interest rate for 5 years. And in 5 years, there's a due on sale clause, or the seller can, or you can refinance the whole thing, which is what you probably do,
or you could sell it,
or you could sell it, or the seller can agree to continue with the loan. So, those are your different options, and you can frame this out however you want to. We're going to teach you guys a ton about how to do this in Ethical Real Estate Professional Exclusive Buyer Agent. That program is getting better and better. I mean, I hate procrastinating. I sure as heck don't want to be feeling like I'm procrastinating. Julie and I are spending so much time making this just something you guys will absolutely be blown away by. If essentially the issues with regards to the buyer agent commission sharing lawsuits aren't on your radar, I promise you they're going to be. Julie did a little search on ChatGPT. Julie, what did you search for?
Yes, it was in the process of researching for a podcast, and ChatGPT said...
No. You searched looking for what?
The most common, highly ranked searches by people looking for homes today.
Okay, so she was asking Chat to look and let her know
what are buyers searching for?
Right. What are consumers searching for with regards to real estate? And what would you guys have guessed the number one answer was? Homes for sale, interest rates, types of mortgages? Nope. The number one response was...
Do I have to pay a buyer's agent?
You guys getting what we're getting at here?
And the number 2 was, who pays a buyer's agent? And the number 3 was, how much should I expect to pay a buyer's agent? It was all related.
Our industry is 100% asleep. And I mean the leaders as well as the agents as to what essentially the negative ramifications of the commission sharing lawsuits. Everyone assumes that all the things are going to be like they were before, and that's absolutely not true. If you want to have an absolute surge in your real estate practice, listen to what I'm telling you right now. You want to get on the interest list for Ethical Real Estate Professional. What we have created is a turnkey solution for getting the exclusive buyer agency contract signed and getting your commission covered. We have created an A to Z a designation, a prestigious designation that all of you guys with pride are going to be, gleefully sharing with the world. Imagine portraying yourself, explain to your prospective buyers that you are an exclusive buyer's agent, but you are also an ethical real estate professional. Go to the website, check it out. But here's what it matters most. Get on the interest list. We're going to be launching this program. I mean, I keep on saying like a couple of weeks, but honestly, it might even take longer than that. We're doing our best job to make it so when this hits the market, you guys are absolutely going to be blown away. I have been privately presenting this to some people, and they've been speechless. I presented it to a CEO of a major real estate brokerage, a president of a major real estate brokerage, and they all want to participate. And I want all of you guys to have first bite at this apple by texting the word buyer, B-U-Y-E-R, to 47372. Your podcast listeners, you're the ones that have been loyal to Julie and I for years and years and years, and we want to have you have the first opportunity to be, really part of the founding group of the Ethical Real Estate Professional Exclusive Buyer's Agent. You want more information on what I'm talking about, you can go over to the website, Ethical Real Estate Professional, but you must, and the only way you're going to get invited to the launch event, which is going to be a webinar, is by texting the word buyer, B-U-Y-E-R, to 47372. It costs you nothing to do that. Just get on the list, attend the event, and then you're going to see what we've created. We are very proud of it. And I'm incredibly excited because I know for sure that this is going to save a lot of agents a lot of unnecessary pain and anguish. Because what's going to happen is in the spring, if you're a brokerage or a team, I dearly hope you're listening to me. Because if you are one of the brokerages that's over $2 billion and you're a party to that settlement, you are going to be audited by the plaintiff's attorneys, seeing if you are staying in alignment with the agreement. And if you are paying buyer's agents who work in your brokerage without having exclusive contracts signed, without it being written into the contract, if you're paying them something outside of the settlement statement, you're not only in violation of the settlement, but you're in violation of essentially, what would that be? Paying money under the table and all kinds of other things. So what's happening already, and nobody is talking about this yet, but you watch, they will, is brokers are still receiving the buyer's agent's commissions, because a lot of closings are still happening that were initiated after the settlement was in place in the middle of August. Those commissions, in some cases on those closings, are being paid to the buyer's agents with no exclusive sign and no concession in the contract. In other words, they're acting as if it was business as usual, 120 days ago, business as usual. And that commission, if it is paid out to the buyer's agent, it's going to be an absolute nuclear bomb to that real estate brokerage. So what these brokerages are doing is they are in some cases receiving the buyer's agent's commissions, but they're going to have to send it back to escrow title. They're not going to be able to pay it out. So you're going to see a lot of buyer's agents in the spring of next year. It's already happening. Julie and I are hearing it from our coaching clients. We're hearing about it from our podcast listeners. Is that agents are going to do all the work they always have. They're going to put that buyer in contract. Everybody's happy. Buyer, seller, listing agent, buyer's agent. At the closing, the buyer's agent isn't going to get paid anything. That is what's going to happen because buyer's agents don't know how to get the exclusive sign. And nobody's teaching them except Julie and I, right? This is something that you absolutely must be a part of. Text the word buyer to 47372. Julie, point number 5, benefits of assumable mortgages.
All right, benefits of it. Well, let's go back. I wanted to give the numbers from number 4. You touched on it for a second. Approximate. So how many, why are we talking about assumables?
Percentages of assumable mortgages.
Approximately 20% of U.S. mortgages are assumable, primarily, again, FHA, VA, and USDA. How much is that? Well, that's 50 million active mortgages in the U.S. That means roughly 10 million mortgages could be assumable. Now, keep in mind that usually there are 4 to 5 million sales in the U.S., so having 10 million mortgages that are assumable is quite worth knowing about, I would say. Okay, number 5.
Well, also, you didn't put this in, but I researched where the highest percentage of assumable mortgages were.
Where are they?
Okay, so should be obvious.
Yeah.
They're in all the major metros.
Yeah,
but
makes
also that's where obviously a greatest percent of them are. But they're scattered, they're dispersed pretty much evenly throughout the country any place where the average loan amount, was less than the max loan amount. So like the average loan amount in some parts of the country is 1.2 million. Mm-hmm. But most of the loans that are assumable, the max loan amount, I think in the most expensive parts of the country is somewhere in the 900s.
Right.
So if that's going to be a market where you're in other words, if you're in a market also where there's a lot of VA and those other types of mortgages, you know what your market is, you know what your borrowers have been using to buy their homes. That's going to be where most of the assumables are. In the really expensive areas, there's not a lot of assumables there because everyone did conventional lending. But in the meat and potato, which is 90%,
which is most of it, yeah.
Which is most of the country, that's where the assumables are.
Well, and I bet if you're in a military town, it could be practically everybody you know.
All of them.
Yeah, exactly. Okay, so number 5, benefits of assumable mortgages. Assuming a mortgage can lock in rates as low as 2.75% to 3.5%, somewhere give or take around there from 2020 to 2021, compared to today's roughly 6.75% rates. This can lead to significant monthly savings for buyers, making homes more affordable despite rising prices. And I asked for an example. For a $500,000 purchase with 20% down. On a standard mortgage with today's rates, say 6 3/4, monthly payment would be about $2,600. If you did an assumable at 2.75%, the monthly payment would be only $1,600. So you're saving close to $1,000 a month or close to $12,000 annually. That's the difference. And again, I use 2.75 as an example. So there's somebody that worked for us that got a 1.875.
Tom. Yeah, I remember that.
And so that's definitely probably assumable.
And remember, guys, this is not distressed real estate. This is normal homes. These are not. We're not saying go out and find something that's
pre-foreclosure,
a dump. No, these are normal homes. And most of these borrowers, they don't even know what an assumable mortgage is. Most of you listening until today didn't even know what an assumable mortgage was. So this is going to be something. If you guys use this earnestly, you're going to actually have an unfair advantage in your marketplace because your competitors aren't going to know about this stuff. Or if they do, they're not going to know the level that you do. All right, Julie, point number 6, the process to assume a mortgage.
All right, there's 5 steps here, but I'm going to do them pretty quick. The first one is verify the assumability. Otherwise, the other steps don't matter. Confirm with the lender or review the mortgage documents. It should be very clear. Then apply. Submit an application similar to a loan application, including income and credit details. The lender that the assumable is with will give instructions on how to do that application.
It is worth noting, and I did some research with Julie on this, talking with lenders don't love assumables because they don't make an origination fee. And so sometimes the lender is going to be a little grouchy about basically having an assumable conversation. So we're about to give you information on how you can basically do all this yourself so that you don't have to wait around for the lender to provide the forms. You can go online and get all the assumable forms from the government websites. And again, with Ethical Real Estate Professional, we're including all those forms so that the borrower just has to fill those out and send them in directly to, whatever the lending agency is. But the lender still has to essentially approve it. But if you're waiting around for the lender who's probably not going to make any commission on the deal, you might not get that deal done. And frankly, they might try to steer your borrower or steer you, if you're doing one, towards something that is going to pay them a commission. Just talking some facts here.
That's right. But if it's in the mortgage documents, it is assumable. There's no waiting for the lender to call you back. If it says so, it is.
It does take a little bit longer, though. We are, from the research we did, doing an assumption takes usually an extra 30 days.
Yes, not 6 months. So be careful what you're reading. All right, lender approval. The lender evaluates the buyer's qualifications just like normal. It's just for an assumable. Assumption agreement. The mortgage is legally transferred via an agreement. And the closing, finalizing the transaction, including covering assumption fees and any differences between the sale price and the loan balance. Now, there's some question, what about seller liability? For VA loans,
point number 7 is seller liability.
Okay, so for VA loans, sellers may remain liable unless they have a substitution of entitlement that we talked about in a previous point. Sellers must request a release of liability to avoid remaining responsible for the loan after the buyer assumes it. Now, a good title company is going to take care of all of this for you, but we're making sure that you know about the substitution of entitlement and the release of liability specific to VA loans.
Well, it's because it is possible that you could actually have somebody assume a mortgage and the borrower then, the new borrower defaults on the mortgage.
And then what?
And then the original mortgage holder, because they didn't get a release from that loan, because they didn't fill out all the paperwork, is going to be held liable for the default of that mortgage just as if they were the borrower themselves. So you got to do this right. And again, we are so ahead of the curve on all of this, and you guys are too because you're podcast listeners. You cannot assume your mortgage company, your title company, your loan officer, your escrow person. You cannot assume that any of them have ever done any of these in their careers because they haven't. So you're going to have to be somewhat of an armchair expert on all this stuff. We're just giving you an overview. Obviously, if you want to become really have a high level of confidence, you definitely want to text the word buyer, B-U-Y-E-R, to 47372. And we are going to give a huge amount of information and deep diving on this. So when you run into the option or the possibility of doing an assumable mortgage, you will be the expert in the room. Julie, point number 8. Can MLS listings include assumable mortgages?
Okay, so this is what to do with this information. Some MLS platforms do allow real estate agents to put into the listing that it is an assumable mortgage. Some MLSs, it's part of the drop-down box where you say, like, is there seller financing? Is it assumable? Could it go FHA? It's in that category. Now, agents can still search MLS databases using filters for your searches, including FHA, VA, and USDA, because you know that those are highly likely to be assumable. The most common assumable mortgage is nearly 100% of those 3 types. Other platforms exist, such as AssumeList.com and Assumable.io. I used both of those, by the way, and they're pretty amazing. They specialize in listings with assumable mortgages, which may or may not be on your MLS. This feature is becoming more widely available as assumable mortgages gain popularity in high-rate environments.
Okay, so point number 9 is lower fees compared to new loans. Now, this is something that should be obvious to all of you. Julie's kind of repeating herself on this point.
Lower fees.
Right, lower fees. In other words, basically for someone to assume a mortgage, it actually costs less than a new origination.
Typically, the assumption fees are only $500 to $1,000 versus higher closing costs on a conventional loan. That's all there is to that point.
Yep, you're going to want to definitely have the house inspected and go through the usual paces of doing any sort of new home purchase or home purchase. But the mortgage assumptions this is going to be for the agents to actually know how to use this information. It's going to be such an unbelievable sales tool. It just makes me excited to think about it.
Well, you know what I would do? I would get a list of expireds that were all, sub 900,000 or so. And I would then do a search to hone in on FHA, VA, and USDA.
Well, even better yet, do a list of expireds, run them through that. Hold on.
Yep, you're okay.
All good.
Run it through the search, whether they're assumable or not.
Right.
And then put those, if they're assumable, those would be the first expireds to call, wouldn't they? That might be the only thing that you have to do is spruce up the description and label it as assumable and talk to your showing agents, because they're not going to know necessarily what that means, and get it done. That could be the key to moving a lot of inventory. All
Well,
right.
it's going to get you an opportunity to impress the seller beyond words when you explain to them how much more marketable their house actually should have been, and it shouldn't have expired had the previous listing agent known about assumable mortgages. That's the whole point
Yeah.
of Ethical Real Estate Professional. We're going to give you guys, so we're tired of telling the industry to get its act together and to basically actually be a true professional who's highest and truest purpose to be of service to other people. And we know where the problem was because, it's difficult for us to share all this information with you, even on a higher level when we're coaching you, and get you to implement it. So what we're doing with Ethical Real Estate Professional is we're actually not just explaining to you what you should do, but we're doing it for you. We've actually created the Ethical Real Estate Professional presentation, which is going to present to the buyer for you why they should be why they should be signing an exclusive just with you. That's something we're not going to wait around for you to develop the sales skills to get people to want to work exclusively with you. We've done it for you, right? That's what we're talking about. That's the reason we're so excited for this. And frankly, that's the reason it's taking so damn long. All right, Julie, point number 10, fewer years of mortgage payments.
That's right. So by assuming a mortgage, and you talked about this a little bit at the beginning, buyers take over an existing loan that's already been paid down for several years. I'm sure there's expireds out there that have been paid down for like 7 years by now with good rates, right?
For sure.
This means fewer years of payments, which can lead to additional savings. For example, assuming a loan that's 5 years into a 30-year term means the buyer only has 25 years of payments left instead of starting a new 30-year term.
It's also worth noting that the assumable mortgage can then, when you decide to put the house for sale, let's assume you don't want to live in the house for 25 years. When you put it for sale, the new buyer can then assume the mortgage again,
making your house more sellable than your neighbor's house.
You guys get it?
It's awesome.
Right.
Now, if I had, in the cartoons where they have like a bubble over your head, what you're thinking, mine on this topic is articulate your value. Isn't that the headline that we've been reading over and over? How do you articulate your value? Well, this entire podcast is just one way of articulating your value. You might be the only one in your entire brokerage that knows how to talk about this stuff.
Are we articulating our value by giving you guys information that no one else is sharing with you? Well, I would appreciate it if you could give us a 5-star review over on iTunes and a comment why you appreciate today's podcast. Our mission on this podcast every single day, and we have done thousands and thousands, like 7,500, I think, maybe 8,000 podcasts at this point. I don't even want to count, but a lot. Yeah. So our mission is to educate you, motivate you, but ultimately you've got to get into action. So your action from today's podcast is clearly text the word buyer to 47372. And you will get it first, you're going to get an invitation to that event. If you like today's information, it made you feel confident, it made you feel maybe even excited to go out in the marketplace and share it with folks, well, you're going to absolutely adore what you're going to learn as an ethical real estate professional agent. By the way, make sure you're getting the notes from today's show, but these are just the notes. This is just merely 30,000 foot training. It's not coaching, but you can get the notes as always by subscribing to harrisrealestatedaily.com. Guys, thank you for keeping this the number one listened to daily podcast for real estate professionals. Have a fantastic day. We'll talk to you on the show tomorrow.